Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, February the 18th. The year's 2020. Let's talk trading. Facts versus beliefs. Over the past couple of weeks or so, I've been really studying about how to change somebody's belief. I've watched TED Talks, I've watched YouTube videos, I've read some blogs, checked out some books, and it just hit me within the past 24 hours. I've spent my entire life using facts, and many times I've stood alone. And it's been an uphill battle. It's been a war. I mean, any of you guys, if you know me back from the trade station days or the e-signal days or the Forex factory days, all around early 2000s, mid 2000s, you know the fight that I've been up against. Because when I present something that I know I can prove as a fact, I am running up against beliefs, some of them so ingrained, they'll never change. And the thing about it is, most people think they're open-minded, but the problem is we all have our beliefs, we have experiences, and these cause us to have filters. And everything that we take in runs through those filters. That's why in trading, we rarely see things as they are because we've been trained, we've been conditioned, we've been taught to see things a certain way based on a concept as opposed to something based on reality. When I say something like, there is no trend, oh, you really know how many people just want to tear me a new one because that's blasphemy. But the bottom line is none of that really matters. What matters is that facts alone are not going to change a belief. So what you have to do is you have to appeal to something on the belief level to evoke a certain emotion. That's why a lot of traders get that shiny object syndrome. They see a new indicator and it promises, ooh, profits, 500 pips, this robot EA, this monster trade or whatever, the latest hogwash is that they're peddling out there. But, if you go back to my work, you see, after I went through the squiggly line phase, which we probably all have done because that's what gets taught. When you come to trading, moving averages, RSI, stochastics, MACD, and these magic settings, RSI 7 or MACD, 12, 27, and 5, or, just whatever, number that they're trying to, magic number they're trying to, push on you, whether it's a Fibonacci series or some Gann quadrants or butterflies or just whatever they're trying to push onto you. You just have to overcome that because once those beliefs get entrenched, they're almost nearly impossible to change. Doesn't matter what the facts say. And so you can't get caught up in that. And that's why I tell people, don't read any trading books, read psychology books. Learn how your brain works, learn how the brain works so you don't get caught up in any of that nonsense. But, it doesn't matter, not just in trading, but in life. I mean, now they have these fact check. I mean, then who facts checks the fact checks and on and on. I mean, there comes a time where you have to make your own decision. And it's pretty much just that simple. Because when you're sitting in front of your computer, your trading platform's open, you're the one clicking the mouse, unless you got a robot running. So it's on you, fellow trader. Okay, now, boys and girls, you know that I have a belief that's based in fact that if you don't have your risk management in place, your stop loss, your position size correct, if you fail to make sure you don't lose any more on one particular trade than you're willing to lose, then you're going to be ruined as a trader. You have to set those parameters before you enter the trade, and you have to stick to them. It's just that simple. So yes, I put this screen up on just about every video, trading video, because it's just that important. And that's a fact. Okay, but remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And trading's very risky, and you can lose all of your money. So that being said, if you're seeking advice, financial advice, investment advice, seek it from an accredited financial professional. You know, somebody that has a certificate proudly displayed on their wall showing that they're an accredited financial professional. So when you take their advice and lose your money, you know you took the advice of an accredited financial professional instead of some guy with a funny name who makes YouTube trading videos, or somebody who posts on Facebook or posts on Twitter or any of the other places on the internet, or sends you stuff in the mail or via email, or sends you text messages. Okay, disclaimer out of the way. On this weekly chart, we're looking at the dashboard, all the gaps filled, boys and girls. What was it? Last week we had a couple that didn't fill, but once again, back to the fill. So looking at these trades, I mean, gaps fill something like 80 to 90% of the time. You know, some pairs fill more often than others. And, you know, no pair fills 100% of the time. But I think you know, when there's a trade that has like an 80 to 90% success rate historically, and you don't take it, you might want to check your beliefs and go, well, why don't I believe it's going to work? Might want to think about that. So the dollar yen is sitting inside the upper previous week's upper wick zone, 2 pips above the weekly open, and you can see here the range for the week's only 30. Once again, just not much happening. Maybe they're waiting for the FOMC announcement tomorrow. I don't know. 103 pips above the yearly open, 43 off the yearly high. Still looking at this big green candle right here, thinking price may return to this level sometime. Okay, we broke out of the weekly opening range right here, the first day of the week, first trading day of the week range. You see we broke out, but we're right back in and across that weekly open. Looking at the weekly open, the weekly buy zone here, you can see yesterday we had an opportunity to go short, either crossing the weekly open or waiting for the short zone to appear, or the price to appear in the short zone right there. And then you see we crossed above the weekly open again, then crossed back below it, and now we just crossed above it again this hour. So traders, you can either wait for the price to get in the buy zone or short zone, or you can take the weekly cross. Either way. And right here, we show the inside bar from 2 days ago. You can see we broke out at the top and the bottom, just a couple. Some people might call that a false breakout, but no, it broke out. I don't care if it's a point. If it goes above it by a point, it broke out. It's kind of like breaking out of jail, and I've already talked about that before. We're looking at the inside bar possibilities here on the daily, on the weekly, and on the monthly shown by the dashboard. Okay, look at this. We actually have 5 pairs over 100 with the new beast clocking in at 220. So for you day traders, the new beast, if you can handle it, that's the one you might want to wrestle with. And right here, once again, we broke out of yesterday's low, looks like by about 6 pips. So there's probably 5 or 6 pips you could have had. Once again, 5 or 6 pips when the range is 30, you're looking at a pretty big piece of the range. So sometimes you just have to take those profits quickly. Weekly H1 lowest open here. You had a couple opportunities to get back in that trade. Weekly H1 highest open that gave you a short opportunity to pick up some pips. So once again, you might have a belief system that prevents you from clicking the mouse when you see these trades appear. You might want to check that. Okay, daily buy zone. We took out the pivot, which was just close to the open. So no big deal. Once we go to the new beast, the pound New Zealand dollar, you see here the green rats feasted. Now the red rats, but actually right at this time it wasn't a rat zone because it was still close to the range wasn't big enough, but it broke off of that and up. And you can see right here though, there is a gap that will probably needs to get filled. So look for price to come into this area if you like to trade the new beast. Once again, we took out the pivot, and that weekly pivot is the 109.82. But remember, we have a missed weekly pivot at 0.36. That looking to see if that one gets filled sometime. Maybe tomorrow with the FOMC statement. We'll have to wait and see. Okay. Price action. Simple. People are still asking, since I quit talking about the 3 balls, the 3 levels easy indicator, now people are asking about it. But it's so simply, you see a 3 ball here, let the candle close. So this is at the bottom. You want to go long. You got a 1 ball here. So you wait for that candle to close and then you want to go short. 2 ball, you see that candle close at the top. Right here, let it close. So you want to go short. Or you can say, hey, price opened here between 90 and 000. It's not going to stay there. So we'll take the breakout here. Or price closed here. It's not going to stay there. We take the breakout there. It's just simple. Price is going to break out of these ranges. It might take a couple of hours or more sometimes, but it usually does. But once again, fellow traders, educational purposes only. Your results may differ from mine. In and out of the wick zone. And you can see it's going right back in at the moment. Horizontal line crosses. I love them. I love them. I love them. Here we have the, I left the Einstein line where it was from a while ago. So you can see here it entered and then it exited once again for profit. Not much moving here at the tick level, about 3 pips, nothing to write home about. Looking here, there's the daily open. You see we went past the minimum, the open minus half the minimum ATR, which was ATR 3. And you see here, we actually went through the previous day's low, as mentioned before, got near the other minimum, or the maximum, half the maximum, the ATR minus the, or open minus half the maximum ATR right there, and price reversed. So opportunities to take profit. Here, lower low, so no inside bar. And you can see here, we've got these highs and lows that need to be taken out to show movement. And boys and girls, that's going to wrap it up. It's not what you trade, it's how you trade it. Go out there and drain the bank.